What happens if China dumps U.S. Treasury bonds? What happens if China suddenly decides to dump all of its U.S. Treasury bonds? Will the dollar crash? Will interest rates skyrocket? Could this trigger a global economic meltdown? It's a question that sparks fear and headlines, but the truth? It's a lot more complicated, and maybe not as scary as it seems. In this video, we're going deep into the economics, the politics, and the power dynamics behind U.S. debt and China's role in it. You'll walk away knowing exactly how this plays out and what nobody else is telling you. Chapter 1. Why China buys U.S. debt. Let's start with the basics. Why does China own so many U.S. treasuries? Simple. It's a side effect of global trade. China sells billions of dollars worth of goods to the U.S., and it gets paid in dollars. But instead of converting all of it back into yuan, China reinvests a big chunk of those dollars into U.S. government debt. Why? Because treasury bonds are safe, they're liquid, they earn interest. And most importantly, they help keep China's currency stable, so it can keep exporting. Chapter 2. Can China actually dump treasuries? Okay, but what if China wants to get rid of them? Can it actually dump them? Technically, yes. Practically, not so fast. Selling hundreds of billions of dollars in government bonds isn't easy. Flooding the market would crash the price and hurt China in the process. It would also make the yuan stronger, which would damage China's exports. So even if they could dump treasuries, it's kind of like setting your own house on fire to prove a point. Chapter 3. What would happen to the U.S.? Let's say China goes through with it. What happens to the U.S.? First, treasury prices would drop and yields would spike. That means borrowing gets more expensive for the government, for businesses, and for consumers. Mortgage rates go up, credit card rates go up, everything gets more expensive. The stock market might panic. But here's the twist. Other investors could see this as a buying opportunity. In times of chaos, investors often run toward treasuries, not away. Chapter 4. Global ripple effects. Globally, this kind of move would send shockwaves through the financial system. Other countries might reevaluate their own U.S. holdings. But there's a catch. There's no real alternative. European bonds are fragmented. Japanese bonds pay almost nothing. Chinese bonds aren't liquid or transparent. And gold? You can't run a global economy on gold alone. So even if China sells, someone else will buy. Chapter 5. The Fed steps in. If things really get dicey, the Federal Reserve has a trump card, literally. It can start buying up treasuries itself, just like it did during the pandemic. This would stabilize prices, calm markets, and prevent a worst-case scenario. In other words, China's dumping may not break the system. It might just shift who holds the debt. Chapter 6. Is this actually a bad thing? Here's where it gets interesting. What if China dumping treasuries is actually good for the U.S.? It reduces dependence on a geopolitical rival. It could attract more domestic investment. And it might even help the U.S. build a more resilient financial system. So yeah, there could be pain in the short term, but long term, this might be a blessing in disguise. Chapter 7. Geopolitical warfare. So, would China ever actually do this as an act of financial warfare? Maybe, in theory, but it cuts both ways. Weaponizing finance risks massive retaliation, like sanctions, dollar freezes, and capital flight out of China. And remember, China still needs access to the global dollar system. This isn't just a money move, it's a geopolitical chess game. Chapter 8. The bigger picture. Whether China sells or not, one thing is clear. The world is rebalancing. The U.S. now relies less on foreign buyers for its debt. The dollar is still the global reserve currency, and new systems, from BRICS to CBDCs, are years away from replacing it. So yes, things are shifting, but slowly, carefully, strategically. Final thoughts. So what happens if China dumps U.S. treasuries? Yes, it would make noise. Yes, it would shake markets. But no, it's not the end of the dollar. And no, it's not the economic doomsday people fear. In fact, it could push the US toward a more independent, more stable financial future. Thanks for watching. If this video helped you understand the big picture, hit that like button and subscribe to Finance Related 101 for more deep dives into global economics.